Welcome to This Week in Money. I'm Jim Goddard. Today, Bob Hoye from ChartsandMarkets.com looks at the major markets over the past week. Was May the worst month so far this year? BoomDoomGloom.com publisher Marc Faber examines global economic influences and how politicians, no matter how much they claim to be on your side, really are not. Ed Steer from EdSteerGoldAndSilver.com takes a look at those precious metals and tells us why they have not been climbing rapidly during a time of economic uncertainty. Plus, right after the show, we'll have a company showcase update from American Manganese President Larry Reaugh. We'll talk to Bob Hoye right after this.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard. My
guest is market historian Bob Hoye. He's the chief investment strategist for ChartsandMarkets.com. Welcome back to This Week in Money, Bob.
Well, here we are, Jim, and it was an interesting week in the markets.
And perhaps a really interesting month, the worst month on the equity markets of the year.
Yeah, it's taken a hit. It was sort of quiet rollover, but what we've been emphasizing through is that we thought out of the dismal December, we thought the markets would rebound right out to around March or April, and accompanied by improving base metal prices, improving crude oil prices, and better action on the yield curve and credit spreads. And these were all obtained to about the right time, March and April. And then the stock market just quietly was rolling over until suddenly in the last couple of weeks here particularly the last week and a half got hit pretty hard. So and the other one that's important with this, Jim, is the advanced decline line. This is where it keeps track of the number of issues going up, the advances, and the number of issues going down. And over many, many decades, the AD line going up is a positive. It shows the market is healthy, a good broad advance, everything going up. But this one began to stall out a few weeks ago, and then it's taken out an important trailing average. And so this is, I made my notes here. Yeah, the last time the ADs went down in this manner was in late September of 2018, and then you went into dismal December. Then in June of 2015, and that's then when you had the problem in the crude oil market where it dropped. Yeah, it was 2014 when it was 105. Right down to the first part of 2016 when it got down to 26, I think was the low number. So that was the setback with the drop in crude oil prices. Then going back to 2007, where this indicator broke down in July, and then the markets turned around and actually had a pretty good rally in September into the middle of October of 2007 is that important peak. And, actually that one I love to talk about it because after October, the stock market was drifting down. There were strains appearing in the credit market, so there were some concerns. And then the economist Greg Mankiw at Harvard in December of 2007 said, in so many words, that nothing could go wrong, and it was because the Federal Reserve had a dream team of economists, and he actually did use dream team of economists. Well, that's when the recession started, and you take the recession plus the hit to the stock market, that was the most severe financial calamity since the 1930s. And so you had a leading Harvard economist say it was impossible. You couldn't have that happening. But now you've had a very important highs for the stock markets in 2018, and then the correction down to right into Christmas, when we had very oversold technical stuff on crude oil and on the stock market at the same time, and thus that's then when we were looking for the rebound out to around March or April. So now prices are weaker. The news they're hanging on it this week is Trump came in and put threatening Mexico with a 5% tariff penalty if they don't stop the flow of so-called refugees, immigrants from Central America. Now, Mexico is a pretty tough country to get in. You got to have the right papers, or otherwise, bang, you're right out again. So, but they have been acting as a conduit to bring in people displaced for whatever reasons from Central America into the U.S. So I actually think it's a good, tough gesture. But anyways, they're using it as a reason to mark the stock prices down. But the real reason we look at is that on valuations relative to GDP or relative to wages, the S&P got very high, even higher than it was in the bubble peak of 2000. So you have high prices and high valuations. You had very good momentum on the way up, and you had sentiment, very bullish sentiment around there. So the market was, let's say, fragile, and was turning down. But this week it's had some news as a reason to sell. But the main thing is that it was very overpriced and looking for a correction. So how much of a correction will we get in here? Not certain yet. But it all depends on whether these commodity prices, basic commodities, and after mid-year, we usually just shift over and say, okay, now we want to look at crude oil having a probable low in November, December. That's the seasonal one. And then you look at copper, it can have a low in November. And then you look at lumber, and it can have a seasonal low in October. So after mid-year on the commodity side, we don't see much support for the stock market. And you have these changes going on now in the yield curve and credit spreads that are really not supportive of the stock market.
Bob, was this truly a sell in May and go away May?
When you look over your shoulder, it could be. Yeah, Jim, to be serious, the answer to that hinges upon how high the stock market was. And as I said, relative to valuations, much higher than in 2007. Well, this index, 128, recent high, in the market peak in 2007, this valuation index was, I think it was 90, 89 or 90 at that level. And then in the tremendous dot-com bubble in 2000, it was at 109. So this is an exceptional high. And so that makes you think maybe this is the top of the bull market, and maybe the correction here now gets rid of some of the excess, and then we find stability through July and August. But then you also have the problem of the fall. And if you are in a highly excited stock market and it discovers that it's just been elevated by hot stories and nothing underneath it, then you can have a liquidity problem in the fall. It's going way back. If you have a highly speculated market in the summer, and then the correction or can turn into a liquidity problem in the fall. So our view, and over the last 2 months, has been that investors should be selling into the rallies and building their own personal liquidity because it may kind of disappear in the fall.
Bob, thank you so much for being on This Week in Money.
Good to be with you, and it was an interesting week.
My guest has been market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. Coming up, Marc Faber, next on This Week in Money.
Always consult your investment professional before making any investment decision.
Grand Portage Resources' Herbert Gold Project in southeast Alaska highlights increased gold resource, indicated and inferred, of 860,000 ounces, in excess of 10 grams per ton gold. Expansion drilling is planned on the Herbert Gold property for the summer of 2019. Grand Portage Resources trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. We're speaking with Marc Faber, editor and publisher of the Gloom, Boom, and Doom Report online at gloomboomdoom.com. He's speaking to us from Chiang Mai, Thailand. Welcome back to the show.
Well, thank you very much for having me.
What do the European election results mean for Europe, the world, and the markets?
I don't think they are that meaningful, because we have individual governments in Europe, but you can see a polarization. The right-wing parties increased their power, and at the same time, the Green parties increased their power. And these are two completely opposite type of parties. So we have, not only in the US, but also in Europe, a polarization in politics.
Is this good or bad when people decide that going up the middle isn't the right thing to do?
Well, I think it's good as long as someone gets the power. It doesn't really matter who is in power, but if nobody's in power, then decisions are delayed, and there is basically a government that doesn't function very well. If you just look at the U.S., in the U.S., one of the big issues, as an example, is infrastructure. But because the Republicans and the Democrats seem to hate each other so much at the present time, nothing much gets done. And so the infrastructure expenditures that would be necessary for the countries are postponed. And the same happens in Europe if the parties are very split. No real decisions are ever taken. You look at Brexit in England or in the United Kingdom. Basically, they had a referendum. They agreed to essentially exit the EU, but nothing has happened in more than 2 years.
Do you think they're going to have to do a hard Brexit? They won't have a deal by October 31st?
Well, I'm in favor of Brexit. I'm in favor of any country wanting to leave the EU. But whether it will happen or not depends very much on whether Nigel Farage will have his way.
Is the push for globalism now a failed ideology?
I don't think it's a failed ideology in the sense that if you look at when globalization began, say around the beginning of the 1980s, it lifted the standards of living of billions of people in the world. Particularly, of course, in emerging economies, and specifically in China and also to some extent in India. So I don't think it's a failure if you look at the average income in the world and if you look at global growth. So that was the positive side. But where the globalists went wrong is they thought globalization is very good for us. Our companies are so strong, they can go into China, they can go into Vietnam, they can go into anywhere in the world, and they will clean up the market and make a lot of money. What has, however, happened is that these emerging economies have developed their own companies that are competing with these multinationals, and suddenly they have competitors which are not welcome. And so there is a turn back into more protectionist trade policies, which in my opinion will add to the slowing down of the global economy, it will not lead to a recession. The recession is caused by other factors, but it will aggravate the downturn, as did the smooth and holy tariffs in 1930.
Is there a deep state that runs the world?
I don't know. I suppose I can say that there is a political class. This political class has no interest in defending the average voter. They are not doing what is best for the country. They are doing what is best for themselves, and they're being supported by big money, people with a lot of influence because of their wealth, or entire sectors, like the financial sector, the healthcare sector. All these big multinational corporations with a lot of power and money, they have a very strong influence on politicians. And so I can say, to some extent, yes, there is a deep state that essentially looks after itself. They couldn't care less about the ordinary person. And of course, some politicians will say, well, we will have to restore and make America great again, and I'm here for the workers. But deep inside, they couldn't care less about the workers. They care about themselves and getting re-elected.
What are your thoughts on the U.S.-China trade war?
Well, I hinted at it already. I think during the time during which trade as a percent of global GDP expanded, namely between 1981 and 2008, that was the peak. The world essentially experienced an incredible boom. The boom did not manifest itself so much in the industrial countries of the West, but it was very powerful in emerging economies and in China, as I mentioned, where the standards of living increased dramatically.
Are companies moving out of China to avoid the trade war tariffs?
You know, it's not so simple if you have a contract manufacturer in China like Foxconn. They may employ up to 1 million people in China, and they make electronics or parts for companies like Apple. It's not so simple to move them overnight to California or to Arizona or wherever in the world. So that is a slow process. But I can say this, the trade war, the way it stands at the present time, is a disaster, because if you are the CEO of an important company, a large company, and you have to make decisions about where to expand, where to build manufacturing plants, at the present time, you don't know where to do it, because maybe the tariffs will be implemented, and maybe in 2 or 3 weeks' time you see Mr. Trump smiling with Mr. Xi Jinping and claiming that they're the best friends, that they made a great trade deal and so forth. So you never know. The uncertainty will, as I say, accelerate the downturn in business, which in my opinion began at the end of last year. Around October, November, we reached peak economic activity, and since then, many sectors, automobiles, housing, semiconductors, have been actually contracting.
Are electric vehicles poised to replace combustion engines in China?
Well, I think electric vehicles as a percentage of total vehicle population in the world will grow. Will they grow as much as some people claim? I doubt, because I think the environmental damage of producing a battery is enormous, and then the discarding of batteries, this nobody talks about. That may be, from an environmental point of view, much worse than driving a fossil fuel car.
People from mainland China have bought real estate around the world. Now that real estate around the world is turning down, what will these foreign buyers from China do?
Well, some have deep pockets, and they will do nothing. They will just sit on the real estate, and others are speculators, so maybe some will take a loss. But in general, the Chinese bought properties around the world, including Canada and Vancouver, with cash. And so they can sit on these properties.
How tough is it to move money out of China now?
Well, I suppose it's not that difficult if you move it through Hong Kong or other avenues, but I'm not living in China, and I'm not involved in, let's say, breaking the foreign exchange laws, so I can't tell you exactly how difficult it is. But there is capital flight, and it will continue, in my opinion.
We'll have more with Marc Faber when we return.
AMY Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, AMY's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at AMYresources.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. We're speaking with Marc Faber. Marc, what do you see ahead for the bond market and the mortgage bond market?
Yeah, we talked about the trade war before, and I said that it accelerated the economic decline, which is already underway. If you look at the bond market and the strength in the bond market, and I have to say I've been positive about bonds for a long time because I saw the economic weakness developing. I think that the bond market will continue to strengthen. The yields in America are still attractive compared to bond yields in Europe, as I think I explained before the last time we spoke. So you can buy U.S. Treasuries at more than twice the yield of Spanish bonds. Italian bond yields are a little bit higher than U.S. bond yields, but not by much. So I think that the attraction of U.S. bonds is still there, and I believe that this year the Fed will embark on cutting rates.
Do you expect the U.S. dollar to remain strong?
No, but it may remain strong for a little while longer. But I think the moment the U.S. will ease monetary conditions, the dollar will start to weaken. And when the dollar weakens, I think it can go a long way.
We're hearing it's getting tougher to finance mining companies now. Is that a sign that gold and silver could soon move higher?
Well, who knows? I mean, I think everybody who owns gold and silver has kind of been wrong and disappointed by the poor market action of precious metals. But if you look, say, at bitcoins were weak until about 3 months ago. Then they bottomed out, and within 6 weeks, they more than doubled. So I think the time for gold and silver and platinum will come, and when it comes, I suppose it will be the time the dollar weakens. But when it comes, I think the upside move could be explosive.
Do you expect to see volatility in the oil market?
Well, we spoke about investments previously and how hard it was for a multinational to take any decisions given the ongoing trade war and the absence of knowing how it will be resolved. In the case of oil, we have also uncertainty about the action of the U.S. against Iran and other potential casualties in the Middle East. So again, it's who knows where the oil price will be in a year's time. I suppose the price of oil should be between $40 and $60 on fundamentals, especially given the spreading weakness in economic activity. But if war breaks out in the Middle East, then who knows, you could spike up to 100.
Do you think the U.S. isn't very concerned about conflict in the Middle East because they're now self-sufficient in oil?
I wonder about that. I think the U.S. has pursued disastrous foreign policies in the Middle East and has never been concerned about civilian casualties. They've been concerned about destabilizing the region, which they managed to do, but at a very high cost.
Do you see gloom, boom, or doom ahead for Canada?
I think Canada is okay, but as you know, it has a very socialist policy. The household debt is very high. The mortgage debt is very high. We have had property market bubbles in various cities that, in my opinion, will be deflated. And the resource sector isn't going to do very well. The manufacturing sector isn't going to do very well either. So I think there are some issues longer term.
Do you find any possible solutions you could mention right now to improve the Canadian economy?
I think the economies in the Western world can only be improved structurally by reducing the size of the government and by having less government subsidies of individuals through essentially transfer payments and having less regulation for corporations, and that will boost economic growth. In other words, I'm arguing against the Keynesian view that if you have a slowdown, fiscal deficits increases will boost economic activity. I think an increase in government spending structurally reduces economic growth.
Are we getting close to seeing civil war in a number of countries?
I think not yet, because in the U.S., the millennials and the Generation Z, they're not warlike. They're unlikely to go out on the street with guns and shoot at each other and so forth. And in Europe, the same would apply in Europe. So I don't think we'll see civil wars right away. But who knows? You know, they sometimes happen with a spark, and the spark then essentially unleashes a fire, and then it spreads like a bushfire.
Are people going to revolt with just a handful of people controlling most of the world's wealth? Will they try to do something about it?
Well, they have begun to do something about it in terms of proposing wealth taxes and higher taxes on the super rich, or increasing taxes on luxury properties and so forth. So this is an ongoing movement, but as usually happens, not the super rich will be touched the most, because they have enough money to finance lawyers and accountants and so forth to evade taxation. But it's interesting that a lot of wealthy people have managed to essentially pay very little tax. Whereas if you are a worker or an employee in a bank, say you earn $100,000 or $200,000, and you have a salary, these are the people that are hit the hardest, not the people that are, say, running hedge funds and so forth.
Does open border mass migration have consequences for markets and economies?
Yes, in my opinion, they have consequences, namely a negative consequence, because there are two aspects. In principle, I'm in favor of immigration, and I'm in favor of people coming and working in your country, and especially Canada, with its size, can afford to have a lot of people coming to Canada with its land mass and with water and everything. But one needs people to come to the country who have an intention to work and not an intention to take advantage of the system. Now, I'm not saying that everybody in Canada has come to Canada to take advantage of the system. Not at all. If you take a taxi in Toronto or so, you have a lot of foreigners from India, Pakistan, the Middle East, North Africa, that work. So it's not everybody who abuses the system. But in the case of Europe, we have, say, the majority, 90%, 80%, they came to Europe in the last 2-3 years to abuse the system, not to work.
We'll have more with Marc Faber when This Week in Money returns.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMY.TSX.V, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. We're speaking with Marc Faber. Marc, is there a growing trend to out and punish corrupt politicians and government officials?
Unfortunately, not yet. I think corruption still pays, and the corruption in the Western world is organized. In other words, it occurs through people having advisory jobs after having been a politician, or being a politician or a bureaucrat and then joining a company like Boeing or Lockheed, as an example, and then going back to government, or having your wife in a senior position somewhere, or your son, or your nephew, or a friend, and so forth. So there is official corruption that is very difficult to tackle, because it's difficult to define exactly where is the corruption occurring. And it relates to a lot of favors, but to prove that it was ill meant is difficult. In Asia and in other continents, the corruption is more direct. In other words, you get the contract to build a bridge, 30% will flow to politicians. That's about the average. But at least in Asia, the bridge will be built. I know some continents where the bridge will not be built.
The Trump administration is focusing on combating human trafficking, child trafficking, pedophilia, and late term as well as following birth abortions. What are your thoughts on humanity?
I think these world improvers have an agenda, and if you look at the history of the world, there has always been prostitution, there has always been slavery and human trafficking, and there has always been child labor. When I grew up at 13, I also went as a runner for a pharmacy. There's nothing wrong with that, as long as it's not full time. So it's very difficult to define exactly what is good and what is bad. In the case of abortion, the country in America is split. I think, this is my view, every woman that has a child or is about to receive a child, that it's her decision to decide she wants to have the child or she wants to abort. I don't think that any government, any church, anybody else should interfere. But you understand, it requires personal responsibility. It's like when you drive a car, I don't think that too many regulations are helpful. It's your responsibility to drive carefully. And I think the modern society, with all the insurances that it has made people careless.
Would a U.S.-Mexico border wall be bearish for Mexico?
Yes, I really don't know. I don't think it will work. I think it's a bad idea. But the way immigration is handled in the U.S., I mean, there's 10 million illegals in the U.S. They have driving licenses. In many cases, they can go and vote. This is also something, it's illegal, but to obtain a driving license is then legal. It's a crazy situation. So something has to be done, and in my view, very powerful reform would be more useful than the wall. But as I pointed out at the beginning of the interview, the Democrats and the Republicans can't agree on anything. They can only agree that China is a villain that essentially threatens the U.S., which is not true. The trade war has occurred because of many factors, and to just blame, and everybody agrees on that, China is the villain now. Before it was Putin, and now it's China.
The controversy over Huawei and 5G development, is Huawei an arm of the Chinese government, or are they just a company trying to do business?
I want to ask you, is Lockheed Martin an arm of the U.S. government? Over 70% of their sales go to the U.S. government. For sure, Chinese companies like Huawei have government connections, like Alibaba and I guess Tencent and so forth. But in the U.S., companies also have ties to the U.S. government. Facebook, Amazon, and Apple and Google, they all have government connections. They all do business with the government. And so it's very difficult to blame Huawei for having government connections. In America, companies have also government connections. In France, equally. In Germany, equally.
Can you tell us about the Gloom, Boom, and Doom report and how people can find out more about it?
Well, I have two reports. One is a printed report that goes out once a month called the Gloom, Boom, and Doom report. And then I have a website report that also goes out once a month, which goes out by email. And the information can be found at gloomboomdoom.com.
Mark, thank you so much for being on the show.
You're welcome. Thank you very much. Have a nice day. Bye-bye.
My guest has been Marc Faber, editor and publisher of the Gloom, Boom, and Doom report, online at gloomboomdoom.com. He was speaking to us from Chiang Mai, Thailand. Coming up, Ed Steer, next on This Week in Money.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain Royalty Corp. is a Canadian-based mineral exploration project generator. The company currently holds multiple property interests in Ontario with joint venture partners and is seeking further joint venture partners for other drill-ready properties in our portfolio. For more information, please visit our website at rmroyalty.com or call me at 604-922-2030.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. I'm speaking with Ed Steer, the founder of EdSteerGoldandSilver.com. He's also a director of GATA, the Gold Antitrust Action Committee. He's speaking to us from Merritt, British Columbia. Our conversation taking place on Friday. Ed, welcome back to This Week in Money.
Oh, thanks for having me on, Jim.
So, Ed, how are gold and silver looking right now?
Well, right now, as of this morning, gold is certainly doing well. It's up on the day as of yesterday, and of course today we're back above gold's 50-day moving average. So the managed money traders are covering the short positions and going long, and that's what's driving the price up right now. And silver, I noticed this morning, took off in morning trading in New York, and it was promptly capped. It's crawling higher, but it's really struggling right now. But gold is looking great, and in time silver will look great too.
Now, what's holding silver back? As we know, when precious metals start to move, silver usually moves the fastest. How come it's not a fast mover right now?
Well, as silver analyst Ted Butler's been saying for decades now, J.P. Morgan basically has been controlling the price of silver ever since they took over Bear Stearns back in 2008. And everything associated with the silver market, whether it be the physical market or the paper market, J.P. Morgan's in charge of. And until they decide they want to let silver price go, they're going to sit on the price. Normally, you're right. Silver normally outperforms gold in a situation like this. And someday it will, but it's obviously not today.
Should a person who doesn't have a lot of money but is interested in precious metals look at investing, say, on a monthly basis in silver?
Absolutely. The thing is, though, that the situation, the setup in the COMEX futures market in silver is so wildly bullish now that averaging in month over month may not prove to be wise. If I was in a situation right now where I was going to invest some money, I'd invest all of it right away, because if they invest in it month by month, it could be a lot higher by the end of July or August or September. So my advice, if anybody's going to buy any, I just jump in with both feet right now.
What are the latest commitment of traders' numbers for gold and silver?
Well, we get the newest report out in about 2 or 3 hours, and we'll have a better idea. But right now, as I just mentioned, silver is white hot bullish. It is almost the most bullish it's ever been in the history of the COMEX futures market. And if it wasn't for, as I said, J.P. Morgan sitting on the price, it would scream higher. The commitment of traders, gold is excellent as well. It's not as good as silver, of course, but it's still in a historical basis going back 5, 10, 15, 20 years. Still very bullish. Of course, with the price action today, there has been some deterioration, but that's to be expected. But right now, as far as the commitment of traders position goes for both gold and silver, it's very, very positive.
Now, we know silver is more than just a precious metal. It's also an industrial metal. And now with so much silver being used for solar arrays and in the computer business, why hasn't there been a higher price for it just because of its industrial commodity purposes?
Well, as you just said, and I remember Ted Butler saying something about it in one of his commentaries in the last week or so. Not only is demand up, but supplies coming out of the mines is going down, and prices should be going higher. It's for the same reasons I stated before. The only reason that silver is not going anywhere is because J.P. Morgan is sitting on the price. And they'll decide at some point, whatever point that is, that it's no longer in their interest to do so, and then we're going to see silver take off and assume hopefully it's free market price at some point.
Is there any speculation about why J.P. Morgan is so interested in suppressing the price of silver?
Well, they've been, as Ted has pointed out over the last 10, 12 years, ever since J.P. Morgan took over Bear Stearns' huge short position in the silver market, they've been accumulating vast amounts of physical silver, far beyond whatever they needed to cover the short position they had back then. And now J.P. Morgan is actually long the COMEX market in silver. And I can't figure out for the life of me why they haven't allowed it to rise, because it would certainly be in their benefit. Ted says they're sitting on a physical silver stash of approximately 850 million ounces, so it would certainly be in their benefit to let the price scream higher, and why they're not as of this moment, who knows.
We'll have more with Ed Steer when This Week in Money returns.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink's CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. We're speaking with Ed Steer. Ed, what's happening in physical and paper gold and silver?
Well, in the physical market, as you alluded to and are correct, physical silver demand is very strong in the industrial user area. They're gobbling almost all of the demand that's coming out of the ground right now, and there's very little left for investment demand. And in gold, more and more central banks are purchasing gold. As everybody's probably more than aware, last year was a record year for central bank accumulation of physical metal. And again in the first quarter of 2019. And there were a couple of stories out yesterday. I think it was the Philippines and Malaysia. Now, Philippines for sure was going to be adding more gold to their reserves. So everybody's getting in on the act. And the physical demand coming out of just Russia, China, and India and Turkey is already gobbling up all the physical gold that's being mined every year. So the central banks of the world, including the Bank of England, probably are having to dishoard gold in order to meet the demand. And so as far as the physical market goes, it's going boomers. But the fact is that the reason the price isn't is because the New York bullion banks, principally J.P. Morgan, have been sitting on the price for the last 10 or 15 years.
Canada sold off all of its gold reserves. Was that a big mistake, and should Canada be reacquiring gold?
I wrote a big article about that 15 years ago, and it certainly was a big mistake. And at the time, I made the assumption that Canada sold its gold in an attempt to bring down the Soviet Union, which ultimately was successful. But there's no question about it. Canada sits there like a sore thumb. We produce the stuff, but we don't have a single ounce in our reserves, and the sooner Canada starts rebuilding its gold reserves, the better. But I'm afraid that by the time they decide to do that, the price will be out of reach.
We'll have more with Ed Steer when we return.
I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. We're speaking with Ed Steer. Ed, is the U.S. dollar still stuck in a trading range?
Well, it's been sort of gently edging higher over the last 6 months or so. But like every other market, Jim, like precious metals or the commodities in general or the stock markets or the bond market, it's being kept aloft by pure price management methods. I mean, I watch the dollar index every day, and you can see that when things get out of hand to the downside, there's what I call the gentle hands come in and support it. So as far as I'm concerned, if the currencies were allowed to trade freely, and I'm talking about not just the U.S. dollar, but all currencies, the U.S. dollar would be repriced at some value considerably less than what it is today. And as with the stock market, the bond market, interest rates, and the precious metals, and as Secretary Treasurer Chris Powell said, there are no markets anymore, only interventions. And that's the reason why the dollar index is as strong as it is. And one of these days that will change too.
Are people fleeing to the U.S. dollar because so many other currencies are weak right now?
Well, it's sort of the cleanest dirty shirt in the laundry basket. And it's also the principal currency that's being used for world trade. Whether it be in Europe or China or wherever, if you want to buy oil, it has to be in dollars. And if you want to buy this and that and the other thing in international trade, normally it's settled in U.S. dollars. Saw a story out of Europe the other day where Juncker, who is the chairman of the European Union, was outraged by the fact that even the Europeans have to pay for the Airbuses they buy in U.S. dollars. When they should be paying for it in euros. So that's how ridiculous the whole situation has become.
How are the HUI and XAU indexes looking?
Well, they certainly are looking very, very happy today. They were up yesterday by a bit. And of course today the gold stocks are really doing well and the silver stocks are lagging a bit, but that's because the price hasn't been allowed to rise as much. But trust me, when the stock market starts heading south like it is now and the dollar index follows it, the money will start pouring back into the gold stocks big time, and it's going to get crazy from here.
Are junior gold and silver stocks showing any strength?
Well, they'll follow the majors. Like the first money that comes in will be into the big cap stocks, but the money will certainly trickle down to the junior silver and gold stocks. That's where the real leverage is, and that's where almost all my investment dollars are in, the small and medium size silver producers these days. So when they start to go, they're going to fly.
How tough is it to finance gold and silver juniors?
I would say that they're having big trouble right now. Certainly the silver producers, the primary silver producers, because at 14 whatever it is per ounce silver it is today, most primary silver mines aren't economical. All you have to do is look at how the the financial statements for the first quarter of 2019 for the silver companies are looking, and it's just a sea of red. They're just bleeding cash out of every orifice of their body right now. So going to the bank to finance a new mine, well, I wish them luck because it's going to be tough.
Of course, if prices go up, they'll need those mines, but once they're shut down due to lack of money, does it cost an extraordinary amount of cash to get them going again?
Yeah, well, if a mine's just on care and maintenance, it doesn't take that long to bring it back up, but I'm talking about new mine production here. If you've got an ore body that's sitting there waiting to be developed, from the time you get approval of financing and get the equipment in place, you're looking at 5 years minimum, so it won't help the supply demand. We can have prices go to the moon, but if you don't have the permit to develop the mine, even though you got a good ore body, the supply is still 5 years down the road. So one of these days we're going to have a huge supply-demand deficit.
What's the latest with the Gold Antitrust Action Committee?
Well, I know that Chris and Bill continue to do their thing down in the U.S. Chris came back from the Far East just last month or the month before that, spreading the word. And we're just out there telling people basically what everybody knows now, even the mining companies, even though they won't admit it, is that we're just out there trying to generate not a gold standard so much, but just to advise people, look, the prices are rigged up with the mining companies and the central banks and the CFTC and the Securities Exchange Commission, the Dow, and the Department of Justice. Please do something about it. Everybody knows it's going on, so we're basically speaking to the choir now. But we're not going to stop until this whole thing finally ends. And I know Chris and Bill have been at it for 20 years now, and I've been at it for about 15. So we just keep, as Winston Churchill says, we just keep buggering on.
Ed, how can people find out more about Ed Steer Gold and Silver?
Well, they can just, what you said, they can just Google my name, Ed Steer's Gold and Silver Digest, or just Ed Steer, and it will pop up, and they can go to my website. I have a sample column there which shows them what they get for their money. And if they're interested, the freight is US $100 per year for about 240 columns.
Ed, thank you so much for being on This Week in Money.
And thank you for having me on, Jim.
My guest has been Ed Steer, founder of EdSteerGoldandSilver.com. He was speaking to us from Merritt, British Columbia. And that wraps up our show for this week. We'd like to thank our guests, Bob Hoye, Marc Faber, and Ed Steer. And thank you for listening. If you have any questions for the show or our guests, you can send them to info@HowStreet.com. Now stand by for a company showcase update from American Manganese CEO and President Larry Reaugh. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at TalkDigitalNetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HowStreet.com.
I'm Jim Goddard. I'm speaking with Larry Reaugh, CEO and President of American Manganese. Welcome back to the show, Larry.
Well, Jim, it's been a real exciting week, maybe not on the plus side, but certainly on events.
Now there's talk that China might restrict its sending of rare earths to the U.S. as part of their ongoing trade war with the Americans. How does that affect American Manganese?
Well, everything like that is actually positive for us, but that would be in the critical metals and the recycling field. Certainly, restricting rare earths, which we're not involved in, is just the tip of the iceberg, because the next thing that'll happen, of course, is they'll start looking at critical metals. And I have to say, especially manganese, because without manganese, there's no steel industry in the U.S., and it pretty much shuts down the Navy and the Army and everything else. So, but we certainly on some of the critical metals that are used in EVs and our handheld devices and all that, recycling is one of the answers, and we're certainly moving ahead on that front. I think we're the only company with a patent out there, And we got a patent pending and another one to be filed here shortly. So, we've covered all the bases. But aside from the rare earths, it's interesting that suddenly became a focal topic, and because they've been talking about the rare earth, cutting off the rare earths for some time now. It's not like it's brand new news, but it suddenly became front and center. But that said and done, it didn't really do a lot for critical metals companies or the guys that are looking for lithium in the U.S. To get their own resources going. The markets are the old sell and may and go away syndrome is still there. So we're not seeing a big reaction in the markets, although we look at being in the critical metal stage, and certainly, we've got the recycling patent behind us. We feel that we're in a very good position now to capitalize on this, and it'll just happen as it's happening. I have to say that we're getting a lot more serious interest in our process, and we're talking to some large companies. Even when I mentioned that we'd be into offtake agreements, we've had some response on that. And it's the sort of thing that, we're basically moving ahead with. I know it's hard to say. We got NDAs with dozens of companies out there, some of them household words. But, it's a double-edged sword. We can't announce who the NDA is with, and because they don't want to know, basically they don't want the competitors to know they're even looking at us. So, and the double-edged sword is that if nothing happens, people tend to blame the management, and that's not necessarily the case. But there is a big interest now, and it's just a matter of time until somebody does something, and, we've got some serious players on the field. So, we're moving ahead with those guys. We even have some kind of suggestions on how they want to proceed with this. And, if any one of those happens, it'll be definitely very good for the shareholders. But getting back to rare earths, we can't recycle rare earths. Somebody asked me that, and, certainly not at this point. We recycle what you call the chemistry's right for what we do with EV cars, and that's a very profitable area. We are looking definitely at very low costs of doing that, and so it's something that we can commercialize and build a company out of. So, but again, rare earths are front and center, and so they should be. You don't have a lot of missiles. You don't have a lot of military applications that can go forward without rare earths. Likewise, you can't have it's the same thing for the battery metals. I mean, if you can't get a hold of the battery metals, that shuts down a large segment of the Army and the Navy and the Air Force. So, we're in a good position. We're just in a poor market, but that will change. I can see that this is an overreaction in May that's been happening, and I think you're going to see the markets pick up sometime this summer.
Larry, for people new to American Manganese, what are you all about?
We're a critical metals company that has developed a process for treating very low grades of manganese, which will be a big benefit to the U.S. And, I think that they should probably, enter in some kind of an agreement to offtake what we could produce down there, because they're going to need it. Certainly, it was used in the First and Second World War, that particular deposit in the steel industry, so I can see that happening again. Now, from that process, we developed a process for recycling batteries, and that's been a key part of our portfolio over the last 2.5, 3 years. And we've advanced that significantly, and it's so recycling batteries is a big part of us. We'll get well over 90% of recovery of all of the cathode materials, and they're very valuable.
Larry, where are you traded, and where can people get more information?
We're traded on the Toronto Venture Exchange under the symbol AMY. We're traded in the U.S. under the symbol AMYZF. And we're traded in Frankfurt under the symbol 2AM. You can you can do a lot of due diligence on our website because we have a lot of information there at AmericanManganeseInc.com. You can phone us at 778-574-4444 or give me an email at LREAUGH@AMYMN.com.
Larry, thank you so much for chatting with us.
You're welcome.
I've been speaking with Larry Reaugh, CEO and President of American Manganese. I'm Jim Goddard. Our conversation took place on May 31st.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of Howe Street Media Incorporated.